Hello and welcome to Rebank. I'm your host, Will Beeson. Lex Sokolin is the co-founder and managing partner of Generative Ventures, a crypto and AI-focused venture firm. Lex also publishes research and analysis at Fintech Blueprint, one of the best fintech, crypto, and emerging tech newsletters out there. In this conversation, Lex and I discuss his thesis at Generative Ventures, which invests in the financial infrastructure powering the machine economy. Lex is a deep thinker, focused on the leading edges of what's currently possible. We're thrilled to welcome him back on the podcast. Thank you very much for joining us today. Please welcome Lex Sokolin. Lex Sokolin, welcome to Rebank.
Thanks so much for having me on. It's been a little bit.
It has been. It's a great pleasure to reconnect, as always. You've been busy since we last spoke on the air.
I think last time we talked, we said that were we wrong about all the neobanks and whether they're all collapsing? And I think now Starling, Revolut, and Monzo are all profitable and worth billions of dollars. So time has flown.
We were early.
Yeah.
And you're early, it feels like, in your new venture being a fund. I think you've been fundraising for some time. You're also deploying, and you're putting so much of the analysis, the thinking, the study that you've done over years at this point into practice, deploying capital into the types of companies and projects that are building the machine economy future that I think you've been predicting for some time. Tell us about the fund.
Absolutely. So one of the things I've noticed about myself is that I'm really interested in novelty. And I've talked before about the idea of novelty search being this hack that you can do where if you just go for things that are interesting to you and that are truly different and novel, like this gets you really big jumps in results. It can also kill you, right? You can be stranded on the mountain and fall down the ravine, but it's also finding kind of the novel paths or what gets you to the top of the mountain. The other direction is taking a linear path, right? So if you are working in a strategy group at Morgan Stanley, or if you're a management consultant at BCG and doing really good work planning quantitative improvements for businesses, that's going to be like linear improvement, 20%, 50% per year is sort of your max. Whereas novelty search, which is actually one of the algorithms that are used in artificial intelligence, novelty search can get you these big asymmetric payoffs. And for me, novelty search has been a guide for my career, even more so than some of these like fintech principles that anchor in trying to make finance better or modernizing banks or doing digital transformation. For me, I've really been more interested in the platform shifts than I have in taking the old thing and making the old thing more efficient or better. And so the last iteration of that over the last year has been to set up a fund called Generative Ventures. Generative Ventures is an early stage fund focused on seed and Series A companies. And we are thinking about the intersection of financial systems or, fintech, blockchain infrastructure. So things around crypto assets as well as decentralized finance, as well as crypto economic networks. And then lastly, the world of artificial intelligence, and in particular, the implications of generative AI for labor. And so this is like a word salad. It's venture capital bingo. But as you mentioned, it's something I've been working on probably now for over a decade. And really, it's a confluence of the research and work that I've been doing and pointing out around the intersection of these themes, whether it's like AI and financial services, or whether what's crypto really for, or what's missing from decentralized finance. And so the fund is a way to try and chew through those questions. And the flag that we planted at the intersection of these thematics, we're calling the machine economy. And it's not just robots interacting with robots, but it's taking seriously that we're entering this world where AI is going to be a huge lever of productivity, where Maybe we're not fully in the science fiction world yet where we're all uploaded to the Dyson sphere around the sun, but we're in the world that most people are projecting, which is that 2 to 4 trillion of GDP is coming from the ability of using machine intelligence for labor. And so you have this growth in productivity. And the following question that we focus on is, what is the financial architecture underneath that? How do the machines bank? How do the machines transact? What's the appropriate money systems for them? Is it kind of the Scotch tape world of embedded finance and APIs and banking as a service? Or is it the machine networks of blockchains and decentralized protocols that are sort of purpose built for robots? And this is a rhetorical question, of course, but that's our focus, that idea of the machine economy. And today already there are kind of different thematics that display this. So there's decentralized AI, decentralized physical infrastructure networks, and everything around it.
All right, so tons to unpack there. I think I have some context for this because you and I have an ongoing dialogue, and I also follow your work very closely. But for people that don't, is there a representative or tangible example that you can share of what some of these robots might be doing, and then therefore what sorts of infrastructure or support they would require?
Yeah, it's very easy to get carried away and go into science fiction land here. I think anchoring in this isn't in the future, this is today, and it doesn't have to be super complicated. It can be very straightforward, right? So anytime somebody uses Zapier on the internet, they're using automation, and these are software machines. So connecting your Gmail to your Airtable and connecting that to some sort of financial action. And more of these types of interactions are being automated. Apple just released its update on how they're integrating artificial intelligence into their phones. And the way they're doing it is there's going to be like a local model on your device. There's going to be a cloud model as well. But the local model on your device will have the ability to read into all of your applications if you let it. So it'll have a chat interface the way that we're used to from ChatGPT, but it'll also be able to interconnect between all the different applications, right? So the phone will become an agent of yours, like a digital twin of yours that'll know your preferences and things about you, but more importantly, will be able to do things on your behalf. They'll be able to access your meetings and access your messages and text or create meetings on your behalf. And similarly, it'll have eventually access to your financials. And if you switch again to the reality of what's happening today, largely on chain, it's things like trading on your behalf or moving money on your behalf. So there's a lot of things going on in Web3 where the things that you want as a user, they're called intents, are being turned into software messages that other applications can go and solve. So for example, a market order is an intent. Like, I want to sell this thing that I own. Instead of just pressing the button and executing the trade, you can create the intent to do that transaction and then have lots of other agents or robots, or what they're called solvers in Web3, go and try to bid and compete for that intent. Like, it's a market and there is an order to do a trade, and I'm going to compete for that trade and for best execution. But you're doing it in a way that's kind of a free market approach. And so already today in Web3, there's this kind of architecture for people who have crypto wallets to declare the things that they want to happen, and then for machine algorithms to go and solve it on their behalf. Another version of this is Telegram bots. So people will create bots in Telegram that are able to do different things. You're now able to tie financial actions into those bots. So again, if you give them wallets, you can have them trade on your behalf or pay on your behalf and things of that nature. For us in the fund, one of the companies that we're really excited about is called Nevermind. Nevermind is a payment processor for AI agents. And again, all this stuff sounds like so science fiction-y, but it's already here. If you're sitting in a big bank and you're like, we're moving to the cloud this year, you're about 15 years behind on progress. So Nevermind is a payment processor for AI agents. AI agents, again, are just bots that do things that you want them to do. Today, there is pretty limited amount of these financial activities that bots can do. There's one particular protocol called the Autonomous Protocol, which is a framework for AI agents. It's plugged into Gnosis chain, a bunch of other chains, and it has a couple of different bots. So one of the bots, for example, is a prediction markets trading bot. What it does is it goes to a prediction market on Gnosis chain. Prediction market might be, if you live in the UK, you want to know the outcome of an election, or in the US, you want to know the outcome of the election in some sort of narrow sense. And there's a question, and people are trading around to see if that question is a yes or no. And so the bot will go to that question, they'll go to that market, then it'll access off-chain intelligence. So it'll ask a GPT model about whatever that market's about, get a researched answer back, then implement the trade by using crypto infrastructure, and then come back to you with profits or losses and so on. So that's an example of a bot. Another bot might have to do with governance. So you have something in your wallet, some sort of asset in your wallet, and that entitles you to participate in governance. So in the equities world, it would be shareholder voting. In the crypto world, it's DAO governance. And so that bot on your behalf would go to the vote. It would interpret what the vote is asking based on your preferences. It would authenticate you, do the call to machine intelligence, have a decision back, vote it on your behalf through your wallet, and kind of bring it back to you. And there's a bunch of others, social media and so on. Anyway, so all these bots are using machine intelligence off-chain, and that costs money to run. It costs electricity and GPU and so on. And so Nevermind is a company that builds a payments mechanism for basically charging up all of these agents with spending capacity. And then depending on whether you're doing like an expensive computation and inference, or if you're doing something cheap, you're doing a cheap model or an expensive model, it would cost different things. And so you end up kind of, in the fintech world, you end up with that CFO function that we're familiar with, like Brex or Ramp, the financial feature set for the business, for a business. But now, instead of a business, you have an AI agent that does things that you need. And so I think one of the directions of travel is to build out that financial functionality, whether it's payments or lending or savings for agents. And again, I know that we're kind of in imagination land, but literally today, you can go and play with these tools.
Got it. You mentioned Zapier before. For those who aren't familiar, it's basically an automation tool where you can log in with one account that you might have, Gmail maybe, and then you can log in with a second account that you might have, Zoom, or I think you said Airtable. And then basically you can set up an automation so that, say when an email comes in Gmail, then it automatically schedules a Zoom meeting, or it automatically adds a new entry to a Google spreadsheet or something like that. It's interesting because I hadn't actually thought about it in those terms, but it sounds like what you're saying is that DeFi, in one sense, one definition of DeFi is Zapier for money, 24/7 instant settlement with the same sort of permissioning available, authentication permissioning on both ends. And then you can set it up to execute value flows on your behalf in the same way that Zapier does basically data flows, information flows.
Yeah, so I think that's a big part of it. And we can kind of scalpel or outline different sectors here. One of them is using AI agents to perform financial functions on your behalf. So like, I want a robot trader, I want a robot financial advisor. They have the ability to custody my money based on permissions I've given them. They have the ability to access it under certain rules and so on. For example, if you look into equities, to the equity markets, something like 95% of the orders that are made in equity markets are algorithmic. They're like an octopus throwing ink to obscure trading activity. And it's the high frequency trading shops that just have these algorithm missiles that they deploy in order to be able to trade around. Similar things can happen in the crypto market for a retail user, for a regular user, right? So that's one of the things that crypto has done, is it has allowed anybody to manufacture really complex financial products. So financial engineering is available not just to like the capital markets desk at Goldman Sachs, but to anyone. And so you can have these really sophisticated financial engineering tools, some of which can be automated like Zapier to go and do stuff on your behalf. Doesn't mean that you should or that it's good or any of that, but you can. The other kind of trend that we're betting on or hoping will come is that there's two different things between financial infrastructure and the financial activity, and then the real economy and the commerce in the real economy. And this is like something I've been harping on for a while because I think people lose the distinction. Finance is there to support real economic activity, not the other way around. If you have GDP of 100%, 15 to 25% of that is financial services, but it's there to help the rest of the economy grow. It's only there to support it. People need bank accounts so they can live their lives, not the other way around. So there's a distinction between these financial markets in which people can play around, and then the real commercial activity that the financial markets are there to support, whether as capital formation, if you're doing a token or equity launch, or in payments, if you're buying sandwiches or NFTs or meme coins, whatever you're buying. And so our bigger bet is that artificial intelligence will lead to commerce that is very heavily intermediated by this AI world. And that can be your iPhone doing stuff on your behalf. Today, you might go into Deliveroo or Uber to order out. Tomorrow, you might just say, Siri, use Uber to buy me a sandwich. In the same way that today, if you have Spotify connected into an Amazon or a Google speaker, you're just like, hey, Amazon, play this music on Spotify, right? You're not interacting with the app directly. And so I think that the AIs will capture and internalize a lot of the commerce, a lot of the commercial and economic activity on your behalf. And they'll also do labor, like they'll make things. They'll already make marketing collateral. Klarna came out recently with a figure that they cut their marketing budget by 10 million because they're able to replace a whole bunch of design staff and image generation and so on with AI workers. And so the bet is that you have this economic activity that comes from inserting generative AI into our everyday lives, but that the financial architecture underneath it will have to change. In the same way that when the internet came around, you had PayPal built on eBay. And when the mobile phone and proximity payments came around, you had Apple Pay built on the iPhone. And when you had Web 2 commerce come around with Shopify and Amazon, you were able to build Stripe through the APIs, the distribution mechanism. And so if AI commerce as a sector comes around, we think that there has to be a whole new set of financial architecture for that, and that the crypto rails are a pretty good candidate for some of that.
Okay, so we've kind of covered some of the financial infrastructure. We've covered the AI components. Talk to us about the physical manifestations of this, because it's easy to scroll Twitter or read newsletters and people getting very excited about AI, and then ultimately realize that AI, at least in its current form, manifests in purely digital environments, which, though they may seem all-consuming to people like us who live on Zoom, for the vast majority of the world, digital experiences might be a minority of their lives. But there are increasingly physical manifestations of some of these technologies, specifically what goes by the name DPEN, which I think is another area you focus on. Do you want to talk a bit about that?
Yeah, absolutely. I think as a side comment, think about the incredible adoption of e-commerce in China relative to the adoption of e-commerce in the US. So the US is still something like 15 to 20% of all retail commerce, retail shopping is digital, right? So like Amazon, for being a $1 trillion+ company, is still like a 10% share of all retail commerce, even though it feels so huge. China, which did not have as much legacy sort of commercial infrastructure, ended up completely blowing past that with Alibaba and platforms like Tencent and so on, which led to the rise of Ant Financial and WePay. And digital commerce in that geography basically leapfrogged the prior generation. So not having something in place can actually be a boon. When it comes to the physical side, there is this theme called decentralized physical infrastructure networks that's clumped together in the last year or two, year and a half, from a storytelling perspective. The earliest manifestations of that theme they started at the same time basically as the first ICO in Ethereum. So if you think about Filecoin, which is a file storage network, there was a ICO competitor called Storage, STORJ back in the day. If you think about Helium, which is like a 2019-ish project, or WorldCoin, which is a Sam Altman creation to scan your eyeball, or IOTA, which is an old blockchain network as well. These things have been around since 2017, 2018, but they didn't really have a name. And so now they do have a name, which is DeepIn. And these projects have now a commercial logic. Like, people know what they stand for because they have a name. They know what their shape is and what they're for. And the simple way to think about it is we've had this financial tokenization trend. Like, every banker in the world has thought about tokenization in some way, right? Like, can we take this currency and tokenize it? Can we take some piece of debt and tokenize it, and so on? And so you had a lot of finance people come into crypto to do real world assets. Same things happening to the telecom people. So there's lots of people who've worked in Deutsche Telekom and TV cable and weather stations and have installed modems of every kind all over the world. And so that group of people, just like the bankers, are here. And they're thinking about, how do we use the bootstrapping mechanisms of crypto economics, meaning raising money through a token and giving it out, crowdsourcing a network, in order to stand up these like really high fixed cost projects. Another trend in the same space is called the Internet of Things, which was very hot 5 to 8 years ago and kind of fizzled out a bit. And so the Internet of Things is about, like, again, having lots and lots of machines that have some sort of intelligence or capability at the edge. The Nest for Google is one example. This also connects into wearables, Fitbits, all that kind of stuff. And so IoT had this problem where you have to spend a lot of money up front in order to create the supply of whatever things that you want to make an internet of. So if you want like an IoT of weather stations in people's homes, or if you want, in the case of Uber, an IoT of lots and lots of cars that connect to a network, there's an incredible upfront fixed cost to stand that up. I don't know how much Uber had to raise before they went public, but an incredible amount of money. And so what DeepIn does is that it solves the supply problem by giving people rewards for contributing physical devices into the token network. In the case of decentralized Uber, you get token rewards for connecting your car and doing work. In the case of the weather station example, you would get token rewards for having the weather station. In the case of something like Helium around bandwidth, you would get rewards for running the node and sharing your bandwidth. And the earlier you are, the larger the reward. So it's a growth hacking to crowdsource the physical network and get around that fixed cost of bootstrapping. But obviously, the money has to come from somewhere. So you're really borrowing that money from the speculation that people have that the token will go up. And so there's been a lot of these different DeepIns in all sorts of sectors within the telecom industry. And we at Generative Ventures ended up making an investment in a company called Peak. And Peak is a DeepIn layer 1 And what those words mean is that it is a protocol particularly focused on helping other DePINs attach themselves to blockchain and operate with identities for their machines and so on. So Peak has something like 20 or 30 different DePINs that are building on it. It's the app store for DePINs. The analogy is imperfect, but that's the idea. The main challenge now, I think, in the sector is not just standing up a network and having a supply of stuff. It's actually getting people to use the stuff that you've created. So if you have decentralized Uber, is anyone actually paying for these taxis? If you are collecting some sort of weather data or noise data or bandwidth data, is there anybody actually paying for that data on the enterprise side? If you're creating a new mobile network from these edge devices, is anybody using that network and paying real money for it? So that's the challenge that the sector has today. But I think in terms of real world activity and stuff you can't fake, that's one of the things I like about the physical robots, is that unlike the software world, they're actually really there.
I can make some assumptions about how the first couple topics we talked about, the new financial infrastructure, the AI agents, and a lot of automation that comes from there, leverages or interacts with DePIN. But it'd probably be more useful to hear it from you. I imagine that your thesis connects these three in terms of formulating, I guess, a view of how they all ultimately will interact.
We all stumble through the dark hoping we can touch the shape of reality. And it is so in this case. Clearly, it's a far out science fiction future that we're trying to solve back. Like, we're trying to take seriously this view of the world and then say, if that view is true, what will actually happen today? And there is a little bit of evidence here and there in the sectors that we look at that some stuff is catching on, right? We see over 500,000 devices attached to Peak, and we see lots of companies trying to explore and build in these spaces. And on the AI side, we see hundreds of projects that are trying to use crypto rails as either the money or the token incentives for every part of the AI stack, from GPUs to data collection to data training and tagging to the actual LLMs and the inference they provide, all the way to AI agents that use the LLMs, and then the things like the payment architecture I described to charge for all of that stuff all the way through. So, like, I don't have confidence that what I'm describing will be exactly like what I'm describing, but I have confidence that this is the right direction of travel and that the things that are being built are of this type.
Well, Lex, listen, it's really incredible to see the work that you've done over years now manifest into a cohesive thesis around what the future looks like, and not only, I guess, abstractly, but one that you now successfully raised a fund around and are deploying again. So I'm very excited for you and very happy to see all of this come together.
Thanks, Will. It's been really exciting to get back to building something from scratch. It took quite a bit of soul searching in terms of building out a fund that I think is doing work that will help the industry and isn't just trying to play like money games. And especially coming out of 2022 and 2023 on the heels of FTX and BlockFi and Celsius and Three Arrows Capital and the collapse of a bunch of these things, and the incredibly negative sentiment that came back in that time relative to the crypto industry, I had quite a bit of trouble finding my way again. And I've spent so long trying to champion innovation, in part for innovation's sake. People will criticize these industries as technologies looking for use cases. And so I had to find again a logic of why I believed in this and why it was compelling and large and not just moving money around from one place to another. between 22 and 23, after quite a bit of thinking, my conclusion was that one of the reasons that crypto's been so volatile is that it's an economy that is primarily just financial services. If we were in the United States and 95% of the economy was just banking revenue, we would have the exact same boom and bust cycle as we do in crypto, because the real engine of the economy is people making things others want and actually contribute to their well-being. There is a real world in which we participate and not just the world of abstractions and money. Trying to find companies that are doing that but are using modern rails to support themselves felt like a mission that I could get behind. Technologies are accelerating and they're exponential and they're becoming more and more alien and harder to understand. And I'm sure that many of the folks that will listen to this podcast will think that I'm using words that make absolutely no sense. But if you dive into the practical implications of these technologies, you can see their potential. And so I wanted to anchor it to real economic growth. And that's what the fund is about.
Lex Sokolin, thank you very much for joining us today.
My pleasure. Thank you for having me.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.